Firstly, if you're lucky enough to be significantly up on your stocks, don't be afraid to take profit early. If you're riding that wave of a stimulus-driven rally, don't get greedy. These rallies often don't last long. Profit is profit at the end of the day. If you suffer from FOMO like I did, and you don't want to miss out on potential upside, perhaps consider taking your initial investment out when you hit a good upside. Also consider selling in tranches. Personally, I set targets and sell a percentage of my assets when it hits those. This way I maintain the upside but also limit my downside. A trading stop loss can also be a good mechanism for protecting your upside. Remember, everyone says that the market is always going up until it doesn't. I fell for this in the past with meme stocks and I lost a lot of money by holding it all the way to the bottom. Now, don't have all of your investments in one sector or region. Diversify across different asset classes such as stocks, bonds, and real assets like commodities or real estate. This will help to cushion your portfolio when one market crashes. Next, look for opportunities in safe haven assets. When markets get shaky, investors often flock to safe haven assets like gold, government bonds, or even cash. Having a portion of your portfolio in these assets can provide stability during a downturn. If you've been watching the price of gold and silver lately, you will see how much it is rallying right now, which is a sign of things to come. Now, if you're feeling more advanced, you can head with options or inverse ETFs. These tools allow you to profit when the market is going down, allowing you to offset your losses in your long positions, and this is a common thing that hedge funds do. Remember, be patient and look for good companies and assets that are undervalued. In the COVID crash, I personally doubled my money by buying blue chip stocks such as BP, Lloyds, etc. in the initial crash. Finally, this does actually slightly contradict my previous points, but if you're unsure, don't try to time the market. Continue buying throughout. There is clear evidence that market timing is difficult. Often investors will sell early, missing out on the stock market rally. Often people do hold on too long though, and they also hold the assets all the way down. By contrast, staying invested through highs and lows has generated competitive returns, especially over the longer term periods. Here you will see how by trying to time the market can significantly impact your portfolio. Using 20 years of data from JP Morgan. As you can see, if you missed the 10 best trading days, you would have shed 54% of your potential gains. That increases to 93% if you missed the 60 best days over the 20-year period from 2003 to 2022. To help with this, you should dollar cost average. Here you invest a fixed amount regularly. This strategy helps remove the impact of market volatility and ensures you buy less when the market is high and more when it's lower. Right, to wrap things up, don't fall for the pump and dump that we might be seeing right now. We're seeing a massive rally in 2024, fueled by the China stimulus, but also there are some big risks on the horizon, especially with Japan rising interest rates and also the commercial real estate scenario that we're currently seeing, in addition to the upcoming US elections. If history is any guide, this rally could be short-lived and we could be in for a market crash sooner rather than later. Personally, I think it's likely to happen after the US election. However, with the right strategies, taking profit, diversifying, and looking for opportunities in both the pump and the crash, you can come out ahead and make a significant amount of money. Watch this video here if you want a further deep dive into the Chinese and the commercial real estate crisis that we're currently seeing. And this video here if you want a deep dive into the recession indicators that are flashing warning signs right now and could be indicating that we're in for a shock coming up. Don't forget to like and subscribe and hit that notification bell if you've enjoyed this content.